I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1 month median return is almost 3% of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
Can you just sort of step back and explain that again? Did you say 20 times?
Yes, there is this very popular trade in crypto called buying a perpetual, which is not necessarily buying the crypto itself, but buying a synthetic version of it with leverage. It was originally created by BitMEX many years ago, but even exchanges like Coinbase offer this as what they call like a 20x or even 50x leverage. So with 5 cents of collateral, you can buy $101 worth of a crypto. Now that's fine if someone's a really good trader, but of course, as you know, if something moves 5%, right, that collateral is lost.
I feel ignorant because I don't think I appreciated we were talking about 20 or 50x leverage. I mean, that's in a whole other realm. What percentage of the market do you think that makes up in terms of a share of what's happening here?
I think most buyers of Bitcoin and Ethereum are cash buyers because Bitcoin is $2 trillion. And you'd see that much leverage if it was out there. But for the active markets, I'm going to guess it's 5% of all trading is with perpetuals. But as you know, that's a lot of volatility, and it triggers what we call collateral cascades, and that's what happened over the weekend.
Does that worry you, Tom?
Oh, yes. As you know, Warren Buffett has said, derivatives are the weapons of economic mass destruction. There's a lot of leverage both in the traditional financial world with structured notes and equity derivatives and private credit, and there's a corresponding system that exists in crypto. But I think that's why most people who own crypto should view these events as a lesson in leverage, number one, but two, as we know, volatility like this really gives an advantage to an investor because someone got a chance to buy Bitcoin at 107,000 and Ethereum at 3,600, and Ethereum's back to 4,200 now.
So how do you protect yourself? Do you have leverage? And what would you suggest to other investors who are watching right now?
Well, as a first principle, BitMine, which is the largest holder of Ethereum in the world, doesn't use any leverage. It's a fortress balance sheet, taking a page from Jamie Dimon's playbook. Large holders have a responsibility to have a super clean balance sheet. and that's a first principle of Bitmine. I think most people I know in crypto do not use leverage because they've lived through those systematic drawdowns. So I think most people who have a lot of experience avoid leverage.